Good morning, everyone. Good morning, ladies and gentlemen, and welcome to this morning webinar. I hope everyone had a good weekend. Anything special from your side? I hope everyone is good and healthy, ready to kick off this this week, which we are in the last week of the last week of the month. So we're going to have some news events. They're going to bring some volatility in the market. And hello, good morning, Japan storm. Okay, hello guys. All right, so as usual, just to make sure this webinar it doesn't intend to give any personal financial advice. Hello guys, some people, they still joining. Good morning to everyone. So here we do market analysis. We take some trades based on how do we see the market, but it doesn't intend to force someone to take trades, and everyone is everyone is individually responsible for our trading. Hello Williams, Raquel, Darshard, Rumen, Cherry. I hope I didn't left someone behind. David, Hatch, and for all the rest people, let's start with the major news events for the day. So guys, here as usual we start with the calendar. Today we have some bank holidays in Switzerland, and I think it's a type of national day in Japan. So for Tuesday, we will have the inflation rate in Japan, previously 2.6%. We're not going to be around to see the outcome. We're going to see it after, because it's going to be early morning for us in Europe. So 2.6%, we will see what they're going to decide about that. Usually Japan, we experience their inflation rates to stay relatively low, and they try to keep their economy always in a stable position. Now, we go to Premium Analytics portal and to the morning briefing, and we just read the headlines of the day, the most important actually until this time. Dollar rise spells trouble for global economies. That's very true. Energy and mining are making the stock market look too good. Overlooked by investors. Loyalties are fetching princely sums. Eurozone squeezes Hungary funding while seeking its backing against Russia. Russia expands attacks on civilian targets in Ukraine after battlefield losses. Why Adobe wants Figma, and why some investors are worried. That's in regards to the stocks. Hello guys, I see some people, they join us now. I hope you are doing well. We just started, so now we will go through the charts, and I think that what everyone expects to see here, the charts, right? Any pairs you're currently trading, guys, or any pairs you would like to see, except of those we are analyzing, of course. Pound USD, if you see all the weekly charts, Pound USD, Euro USD weekly, Kiwi weekly, all of them, they were finished the week with a strong US dollar. Going back to the pound, we are in a downtrend, although we are sitting at a very strong zone of support. And as I told you many times, guys, what do we learn when the market, when the price touches a support, a strong support, we said that many limit buy orders are sitting here at these areas, and they're gonna force the market to push to the upside. Sometimes the sellers are super aggressive. They know that there are limit orders sitting here to take the market to the upside when it's going to approach. And if they decided of the direction and it's going to be moved to the downside, instantly we see a follow through. Okay. But if we're going to see some fluctuation here and we don't see the buyer stepped in instantly and reverse aggressively, it means there are not enough orders sitting around here to take the market to the upside. And also there are not sellers from this move closed positions to take their profits. So this action as well, it's going to lead to the price to move to the upside. So these are the two scenarios, always around strong areas. That's why, because we don't know the exact direction, always we prefer to stay out of these moves until we have clarity. All right, guys, just give me 1 sec. Okay, apologies for that. I had to change the headset. Okay, so here we are. The move, it's over with the pound. Now we are waiting to see if the market, if the buyers, they're going to step in and they're going to push the price to the upside. But if not, and we will see the sellers push to the downside, then definitely we're going to wait for a close below, and we're going to start looking for some retest and some reasons to go short based on our checklist. Now, if you draw a trend line here, maybe we can see some, and as I said, for those who are new in the webinar, instead of just a trend line, I could just draw this trend line here like this. It's exactly the same. I prefer to use the channel lines because sometimes we can structure the price also on the bounces, and we know where the retracement most likely it's going to start. That's why it's just personal preference to use the channels if they are applicable. Daily watch list, USD. Yeah, Darshan, we're going to see the USD JPY as well. Lots of pairs. And I'm really excited to see you guys typing and asking questions and pairs and all this stuff. It's really awesome. Remember, this webinar, it's for you, and it's not for myself. It's not for Admirals. It's for you, for your own personal interest, okay, to learn. And as I always say, my goal here is to make you thinking in the terms of how can you become a skillful trader and profitable trader, or always considering the losses or cares. And that is going to come with repetition. Let's have a look at the euro US dollar. Same, we are on the weekly chart. We see this pattern continue to the downside, nice swings. We take lots of trades with this because that's a trending market. If we go down to the daily, we see that we stuck around this area here. However, it's very obvious. We're going to have also on the 22nd, I think, of September this week, we're going to have the interest rates announcement from the USA. 99.9%, they're going to raise it a lot, so it's going to still be bullish. So most of the all of these currencies, they're going to just sell off. That's a very simple outcome in terms of thinking. So we are still bearish. We are looking for pullbacks, for price action. Here it was one price action here, but it was very early, so we weren't around. could offer you 20 pips, 31 pips until here it's 53, so 2.5 to 1. So that's a good trade. As I said, we weren't around here. I don't think so any one of us was around. Maybe people who are watching us from Australia, maybe they were around. That was a nice pin bar, bearish pin bar. Moving on, USD CHF, we said that if you saw, I put a limit order, buy limit order here based on this bearish engulfing price action, bullish engulfing price action. And as I told you guys, always when we see a long bullish engulfing, usually, not always, I take it back, usually around the middle, the 50% of this candle, the market retraces before it takes over. Usually, not always, and I'm happy to stick with my plan because this is a daily chart. It's not a 5 minute, 15 minutes or 1 hour chart, which we can enter right on the breakout of the candle. We want to be more consecutive when we are on the daily chart and to have better reward to risk. So we have, because we take less trades, so we want them to be higher reward to risk. Okay. Aussie, the same. We are waiting for the price to push lower. We still have some room for intraday trading, maybe 15 minutes or 5 minute chart. See here, we see lower highs and lower lows. So any pullback here, we didn't have a good pullback. A good pullback here could be a help to initiate some shorts. Here it's your trend line or your channel. You see how the channels, sometimes they fit very, very nicely within the price. So the market make like this, lower highs, lower lows. Let me show you. We had this. If it pull back somewhere here, then it's going to be good to short it, and we can target this lower level here. Intraday trading, we use sometimes less risk. Okay. And that's it. Kiwi, as we said last time, it was the clearest pairs out of everything. So we were selling and only selling with this one. On the lower time frames, of course, 15 minutes, 5 minute charts. And today it's still for sales. Any pullbacks, if you are trading even 4 hour charts, 1 hour charts, any pullback, good price action here, we take it, we go to the lower time frames and then pull back on the zones and we take it. USD Canadian dollar, an order was sitting here with the anticipation of the price to pull back, take us to the upside. Still bullish. We are waiting a breakout out of this area. And on the 1 hour chart, 15 minute charts, higher highs, higher lows, we just enter the market. Simple as that, guys. Okay, guys, I see a lot of questions. Just bear with me for a while. Just allow me to go through few pairs and then I will come back and answer all your questions. Okay. Not because I don't comment instantly, it doesn't mean that I don't see them and I don't read them. I just want to focus first on the markets and then we go through all the questions. USD Jpy daily chart, we said that the market is in an uptrend. Weekly, it's in an uptrend. However, super extensive uptrend here. The market last week was unable to make a higher high, but doesn't necessarily means that it's going to make a lower high, and that's where many people they get caught. I know few people, unfortunately, they enter at this area here for the retracement. They had their stop exactly here. They get kicked out by the spread. Again, this is a counter trend trade. It's not a high probability trade. When it works really good, but it doesn't work that often to give us a good edge in the market with this type of trade. Because some other people, they see this one here, this pin bar here, can help the price to push the downside. we sell here, we have our stop there, boom, bullish engulfing, take us out. And then the scenario is just keeps going. This bearish engulfing here, this candle, we sell, and then the market just take us out and keeps moving in the predominant direction. So it's better to stick with retracement trades, because these counter trend trades are not high probability trades. Let's move on. Aussie JPY, yeah, Aussie yen, euro, Swiss. Let's see the Aussie yen. Let's put it somewhere close. Aussie yen, finally the price last Friday rejected around this support. We said that if the price is going to come here, we want to see some reaction from the buyers. And remember, last Friday we were watching this pair, and we said that the market is making lower lows here, so we didn't want to start buying. We wanted to see double bottom to start buying, like here, double bottom, buy. Here, lower highs and lower lows. It means that sellers are in control, but if we want to buy, we want to make sure that buyers are in control. And listen to that, guys. We don't want to be the buyer who will control. I repeat that. We are not, and we can't be the buyer who will control the market. We are retail traders, and the reason we use this technical analysis type and we combine with some fundamental basic analysis, it's to give us a good edge in the market. Now, because we don't have the funds to move the Forex market, which it makes trillions of dollars moves on a daily basis, that means we are not the trader who will decide here if the market, or there if the market it's going to start pushing to the upside. But if we're going to see a series of higher highs and higher lows, we know that the traders who've decided about the direction of the market, they are buying. So we can use it in our benefit and start buying. Okay. But when we have lower highs and lower lows, it's not really worth our money to put some buy, stop buy orders here to get us with this higher high. We can just simply be patient, see the higher high, higher low. We wait for a pullback, find a good entry on the lower time frames, like 4 hour, 1 hour chart, and then we have lots of room to go until this target. But for now, the information we have from the market is that sellers are still in control. We would like to see either a double bottom here now, or this one reverses, or the next candle reverses and make a higher high, then we start buying. But for now, we are around this area. Anything can happen here. So I prefer to see clarity on the price action. If it's not going to happen and we're going to see lower highs and lower lows, definitely we're going to sell. Okay, but for now, we are just waiting. And the Euro JPY, we tested this resistance. The market tried to break above. We see the close here, but it was unable to sustain the closing price. Then the next session, next day, it just closed below, and then it's selling off. We see some strength in the Japanese yen across the board, also on the Swiss, and we are in this type of retracements now. Okay, how long it's going to last, we don't know. If it's going to be a new trend develop from here, we don't know. So the only thing we know here is that we do not see a pattern we can identify as a high probability pattern. I repeat that. Here at this stage, we don't see a pattern and a price action that can be identified as high probability trade, so we can initiate it positions. That's the information the market is giving us. CHF JPY, we had this bearish engulfing. After that, the market retraced more than 50% of this bearish engulfing, and then it starts selling off. However, some people, they like to take this type of trades. That's not my style, because at any point it can reverse. So I prefer to see the market comes here, which It can have lots of orders waiting to take it to the upside or even there, even better. The deeper, the better, because it gives us better reward to risk. So for now, we are in the retracement phase. If you are trading 15-minute charts, for example, yes, definitely you're going to see lower highs and lower lows. And for you, that is a downtrend. But if you are trading daily charts, 4-hour charts, this is a retracement of the higher time frame, and it's better to wait for the market to give us a good entry there if it's going to give us. Let's have a look. Any other pair? We just went through the Aussie JPY, Euro CHF daily double bottom. Let's check it. Euro CHF. Yes, absolutely. Euro CHF double bottom. Anyhow, here I mark this pin bar, as I told you, for a limit entry order. It didn't trick me in. Maybe it's going to trick me in, but if the market is going to come all the way and retest these areas here, definitely I will delete the order, because maybe sellers, they took control, but for now it's buying pressure in the market. And if you see the checklist for the range market, we have first strong horizontal. We do have it. The second, a type of pattern consolidation, double bottoms. The third one, price action, bullish pin bar, strong bullish pin bar. And the fourth one, you can check the moving average conversion divergence, or MACD, and you can see a strong divergence here for those who are trading or know what divergence are. Divergence, for those who don't know, it's when the price is making, let's say we are in a downtrend, and the price either making lower lows or stop making lower lows, but the MACD indication here, it shows that the indicator, it makes higher highs. So we have a disagreement between price and indicator, and most of the times we experience some reaction based on the indicator. Okay, let's have a look. Other pair. So Darshan, around the Queen's demis, the rally was fast and strong, but now we are probing lower. I wonder if it can retest 117 now. Should come another rally if they increase the interest rates in the UK. Look, when they are increasing the interest rates in any country, their currency gets appreciated. But on the other hand, we see all the major banks raise their interest rates. Okay, and we see that the US dollar, when the interest rates in the USA get increased, US dollar just perform better, put that way, than the other currencies. So that leaves us with the conclusion that US dollar is stronger than the other currencies. So if pound, it's going to get strong, and if the US dollars, it's going to also become strong, then we're going to see kind of sideways moves until we're going to get a clear direction. But if that's going to happen, then we prefer to find a weak currency and trade it against the US dollar and against the pound. Okay, there is no point when two big economies, they're going to raise their interest rates to go inside and fight which currency is going to move more. It's going to be smarter for us to just find, let's say, a Canadian dollar or Aussie Kiwi, something which is relatively weak, and we trade it against the strong. It's higher probability trade. Gary, hi Theo, can we add S&P 500 to our daily watch list, please? Absolutely, no problem at all. Let's do it right now. And thanks for mentioning it. I'm sure other people as well, they have this inquiry maybe. So S&P 500 successfully added. Let's put it somewhere next to the gold. And let's have a look right now. So S&P 500 on the weekly chart, as we said from last week, we had this type of push to the downside. I like that we put this bearish engulfing. There is clear room to move to the downside, guys. All this space, it's available for trading. And now we are on the weekly chart. If you go down to the daily chart, you can see that this bearish engulfing here, we said it was very strong and we could put a limit order here, but the market didn't came back to take us into the trade. So this bearish engulfing triggered another, on the 4-hour, triggered another impulse move to the downside. And we're going to look for lower highs, lower lows on the lower time frames, and we start selling. But definitely this is a sell. On the 15-minute chart here, if we draw a trend line or a channel, doesn't matter. So we see that the market is trying to make a push to the upside. If we see some sort of reaction here, we can take advantage of this one on the lower time frames. Okay. When the market is just selling off without any retracements like this one here on the daily charts, unfortunately, the 4-hour charts, rarely it's going to give us an opportunity. So we have to go down to the 15 minutes, maybe the 1-hour chart, but mostly the 15-minute charts give us the good entries in this type of markets. Any other pair? Gary, I hope that it's clear. Good morning, Theo. Can we look to short the euro yen 4-hour based on head and shoulders? Look, because now the euro JPY, okay, here is the thing about head and shoulders. On the webinar I've done, if you see the actual pattern, the head and shoulders, we want to see the neckline not to slope downwards. We want to see the neckline to slope a bit upwards when we trade head and shoulders. But now it didn't show us this upward slope, without meaning that it cannot be a good selling opportunity. But as technical analyst, this it's not translated as head and shoulder. Okay, but definitely we see some strength from the JPY, and this can definitely, if applies your rules, Alan, you can act accordingly to your rules. For me, if I was about to take this trade to the downside, I will make sure that somewhere here, I will look to log in some to bank some profit somewhere around this level, because here it's another subject with the long candles, with the volumes. There are order block trading activity. There are orders, unfilling orders. Price is going to try to mitigate some of these positions. So that's another story. Okay, that's totally. I didn't mention anything about trading blocks and all this stuff here, but just to summarize, it's more appropriate to, if you sell from there, to just take some profits out of the table, because maybe here some reaction is expected to happen, or down there. Okay. What pair? I see a divergence there also. Good, Cherry. Nasdaq, please. Yep, let's have a look at Nasdaq. However, all the indices, they behave pretty much the same. Same scenario like the S&P, room to move to the downside. We are in a bearish, very, very, very bearish move here. So we have lower highs and lower lows. And we can take advantage on the 4-hour chart, 1-hour chart, 15-minute chart for lower highs, lower lows to just sell. Now, it's a clear selling pair, this one as well. We are in a downtrend. Okay. Sometimes, guys, you think that I know what is going to happen next. I don't know. I just trust the technical analysis and the patterns behavior. So we have this series of lower highs and lower lows. Market pullback here on this area here. Boom. Took us in the first trade, for example. then the market it's make this move to the downside. We see sellers in control. So if the price it's going to retrace before touches here, then definitely we can see we have a trend line somewhere here. We can see some more sales to go and reach this area. What pairs or instruments you are trading on short time frame, please? I prefer 1 and 5 minute charts. Otherwise, I get bored waiting. Yeah, HV. In 1 minute and 5 minute chart. I also trade in 1 minute charts. A lot of pairs, but I stick to the majors: Euro USD, Pound USD, USD CAD. I don't do 1 minute, neither 5 minutes. Any pair that has a spread more than 3-4 pips. Okay, I try to, I definitely avoid Kiwi pairs, cross pairs, Aussie CAD, New Zealand Swiss, all these pairs, Pound New Zealand, Euro New Zealand, big spreads. So widen spreads. I don't do that. How to set a trading with take profit 1, take profit 2, and maybe take profit 3. How does it work? Do you have to close partial? Yeah, when I do it, I close partial. But if you want to set up profit targets in a different trading orders, you can do this thing, Cherry. Let's say if your full trading size is 1%, and you want to open 3 trades, you just divide it by 3. So you open 3 trades, and each trade, it has 0.33 lots. 0.33%. So the 1%, you divide it by 3, you open 3 trades. The 1 trade, you set up the, I assume the stop loss, it's going to be the same for all trades. And then on the take profit, you set the take profit here. Then you set the second one, take profit here, and so on. The third one, take profit there. Other question, the same trade. Yep. Cherry, I hope that's clear. Ioan, Theo, the symbols of the main currency in this is USD, Euro, Pound, Swiss CAD, JPY, Aussie New Zealand, found on MT5 are not clear to me. When you have the opportunity, give me a list of these symbols, the usual symbols of the currency indices on MT5, so that I can make a profile with charts. Okay. How can I give you the whatever? Okay, put it that way. The major currencies on the MT5 is the ones they have the US dollar involved. So USD Euro, USD Euro USD, Pound USD, USD Swiss, USD CAD, USD Yen, Aussie USD, New Zealand USD. These are the majors. Okay. So basically these are. Now, if you struggle on how to add them in your platform, you just simply open the market watch, you find the pair you want, and you just right click chart window, and it's going to pop up. Okay, if you have difficulties how to add them, we have lots of videos on YouTube. You can Google it. But if you still have any problem, please make a live chat or okay, the indices, they should be found here. You just do right click, show all, make sure to show all, so you can have all the indices. And here you can take, I cannot send you a picture here, but you can take a screenshot. Take a screenshot, please, or take a picture with your phone. These are the indices we use with a pink color, and make sure you just add them in your MT5. Okay, I will leave that for you. All right, guys. I hope this session was very, very good for you as well. Today is Monday. We're going to have lots of volatility coming in the market. I'm about to record the podcast for the week, so I'm gonna upload it later on the website. If you want, I will just quickly take you through where we put the podcast, so you never miss anyone. You just go to let's just go to the main Admirals. You go to analytics, weekly trading podcast, and here you can see the podcast we do. Okay, I will share with you the page in case you never found the podcast, and I will go through every week. I'm going through all the major news events. I do some fundamental analysis, and you can combine it with your trading, and it can help you a lot. And as you can see here, all of them I try to make them in about 5 minutes time. Okay. All right, ladies and gents, I hope you gain a lot of value from this webinar. I wish you happy trading. Okay, thanks for your participation. And I look forward to see you again at the same time. Thank you so much and have a good day. Bye-bye.